Market recap for Wednesday, the 21st of January 2026. I'm gonna try to keep this short and sweet because there's a lot to cover, right? So let's just start with the bias, right? I was I was I was initially bearish yesterday on market close, just for the fact that I expected these relative equal lows to be kept. Again, this and then go higher right here, keeping them lows, and I expected to short to somewhere around here, and I'm explaining why this area, right? Before thinking of this sell side liquidity. Why? Because if we don't take this area, and I'm explaining why, there's no point to go to this liquidity, then we're gonna head higher. Because again, we have two large draws on liquidity, which is the relative equal highs, the big large new weekly opening gap as I explained yesterday. So it's just if statements basically, right? And down to probabilities. However, at 8, I was very bullish, right? Why? Because the market set up these lows, right? Again, and then swept them, consolidated down here, which is a 4-hour suspension block, right? This was the last result to hold price, right? This 4-hour suspension block right there. It was the last result to hold price, and as you can see, all the bodies were above midpoint, and we just wick into midpoint. In terms of weekly levels, this is the 0.25 as well on the weekly, as you can see here. If we can just zoom out on the daily levels, if you remember that we went above the 0.25, but the last result to me is the lower quadrant, really, for price to go higher, right? As you can see, we went to the lower quadrant and headed higher. In terms of daily levels, again, midpoint of a wick, right? Why that specific wick, right? Because it's the largest wick down there. And on top of that, it was a wick that was used on this run up as well, because it was the 0.125 of it exactly. As you can see, extend this over price, midpoint as well. So the weekly, the daily, and the 4-hour aligns, and these are the highest I would go for long-term PD arrays for reversals, etc. Right? So I can see that the market is bullish. There's nothing that's bearish about it, and the overnight session was setting up to be bullish as well. Why? Think of this area, right, on the 15-minute. The fact that we already went pre-market lower, right? Just think of anything under here, under these lows, as just accumulation, right? Once we like displace and then instantly inverse these gaps, that was just pure accumulation. And if you think about it in like an hourly or something, it will just look like a turtle soup, basically, right? You can see turtle soup and then go higher, right? Inverse this gap, use this as a breaker, or use this whole area as a breaker, right? So initially I'm bullish. 8:30, we have news today. Trump speaks. It's a red folder. And as you can see from him speaking, the start of 8:30 is right here. And then the market starts parabolically going all the way up to the liquidity that I wanted, right? Why this liquidity specifically? If we head into this chart, you can see that we have two stages of buy side liquidity, right? Our closest one, which is the London buy side with the PM buy side, right? Laying above them a 15-minute fair value gap that I want to see what would price do when it gets to there, okay? So in terms of how strong price would go, right? The fact that we already went here pre-market just shows that we're likely to head actually back to these highs and then large new weekly opening gap, okay? I in fact wanted to long, but I wanted a clear nice entry just because of how parabolic this run up. Sometimes when they do a parabolic run pre-market, they can stall this all the way till 10 or even 11, right? Engineer liquidity, sweep, and then head over again. Or they could do exactly this type of run, right? So in case of this type of run, I would have wanted a larger stop loss, right? So as you can see, market went all the way up to the liquidity that I'm expecting for it to visit. And initially, this is what the trade that I wanted. I wanted the market to open up down here, right? And then I could just enter somewhere here, heading for that liquidity, and that's just enough for me for the day. However, the market at 9:25 has already taken that liquidity, visited that gap, right? And all these are just the inverse, right? The inverse gaps of the run up. So they're expected to be used as price for like stepping stones. This gap, just two 15-minute fair value gaps that I'm expecting full respect of. Okay. So now we know what these weird boxes are. We can see in the run up how price already right here after the inverse went to the top of the first one. Bodies are respecting the second one. Okay. And then once we go up, I'm expecting it to respect it again. That's why the fact that market opened right here, I went short, aiming for this just as a buffer. I was looking for like $300 or whatever as a buffer that I can add to my trade, my main trade, for a stop loss, right? And if it hits break even, I don't care. So my entry was exactly there in the volume balance. As you can see, we just wick into it, and then in 2 seconds I go break even because it shouldn't go down there again, right? It was just one of them. Okay, I know it's gonna go down, but could it go down here, or even like have a wick to this low just for good measures and then go higher? Regardless, it was a no lose trade. I'm a best case scenario, I'm gonna get an extra buffer for my longs, and if I don't, then it's whatever, it's gonna be break even. So I get filled in, goes down here, it's almost at like 250, comes back up, but then it wicks way too high for me. Mental note was like the mean threshold of this order block, right? And then I just ended up closing it. It doesn't hit my break even, but this wick was way too high for me to even consider staying in that short. So I just closed out like around $50 or whatever. And then eventually it ended up hitting my target literally 2 candles after. It doesn't matter. That was not my trade idea, regardless. I just wanted to see if we're gonna respect any of this, right? Because this area here is a 15-minute fair value gap. I don't want no closures below. I don't want nothing in terms of 5-minute, nothing. I'm not seeking that sell side liquidity, right? It's written as sell side, but I'm not seeking it. Why? Because there's an SMT with ES right there. Right, you see that low, lower than that low, right? SMT with ES. So I'm expecting this to be a low of the day because of all the three confluences that I outlined at the start of the video. So now longs, right? Once market comes and visits this inversion fair value gap, boom, again, and then heads higher, I wanted to get filled on this order block, right? Once we really went above it, I wanted the fill on the order block. This doesn't come back and wick into it. That makes another order block, right? That I can see it went to the mean threshold of it right here, there, and then headed high. That was just gonna be my fill, right? Because I wanted more of a tight stop loss around here, right? And I would expect it to visit it. The fact that I didn't visit it is just unlucky, right? Happens, missed the trade, right? Could I get over on the next order block? Yes, right? But the thing is, I'm not too confident in this run up, right? Because of previous market conditions, right? How it was moving and stuff, right? Because other days, like let's say for example, like Tuesday, when the market was stalling up, right? When it was meant to go, look at it, it's stolen. This is Monday, right? Tuesday as well, at around like 9:30, there was a lot of signs that it should have went up, but then again, it just consolidates, it does some weird stuff, right? The fact that I didn't get my buffer, I don't enter market orders, right? I don't enter market orders unless I'm confident in the market, right? So if it closed above here, then I'd market order, stop loss at the low or something like that, like large stop losses or stuff like that. But a market that I'm not confident in, I'm just gonna be cautious until it shows to me time and time again and then proves to me that the market is actually running how it should run. Then I could be back at full risk. But in January, technically all the way until February, I'm just gonna take it with caution until like the market is fully back to normal. There's no shenanigans, right? So once the entry is missed, I just didn't care, right? I just followed what price was gonna do, and is it gonna hit the TP, right? Like there's nothing like the world's not gonna end if I miss an entry. It's not that deep, right? I'm trying to get precise entries. Why? Because I like to go break even really quickly, right? So once we head here and then made this order block, like I would have already went break even. There's no point. I only go. My entries are normally at places where price should not come back there again until it completes its run, right? So me entering here, which was low-key trying to target the volume balance on the first presented, which it hit first here, that I didn't notice, right? I thought it went slightly higher. I wanted this, right, for it to make something that would make me go break even basically instantly. Just exactly like this trade, right? My entries are always like 1-2 tick into the entry and it's gone, and then I'm already break even in 30 seconds. I don't mind this style of trading. That means I'm gonna have moves like this missed, but I don't care. Could I have dashed like 1-2 MNQs there for good measures and just let it run? Yes. Do I care? No, I do not care. I'm trying to perfect my craft. I'm not trying to make money right now. This is not my goal. Anyway, once I'm done, I'm confident. I have models for re-entry over higher and blah blah blah. Then I'll be good to follow price action. But then I was mentally noting every step of this price action, right? We're entering around the 950 macro. Okay. Order block starts. This. I'm watching the mean threshold. Are we gonna respect it? We go straight to the mean threshold, right? Next order block. Are we gonna respect the mean threshold? Yes, we're on the upper quadrant, and then we head higher. Then we make a fair value gap above the 15-minute fair value gap that took price down, right? So we inverse it. Do we respect this? Yes. Okay. This area, this is the first presented fair value gap from yesterday. Do we go above it and then respect midpoint? Yes, right? I'm taking a mental note of everything until we run up to the buy side and then weekly opening gap. Okay. Now to me that the trade is done, right? Regardless if I'm in it or not, the trade is done, right? We hit our target, we hit our liquidity, we had a nice run up. Did I get my entry? No, it happens. Move on, right? So once price hits around here, I think that's what's like, there's no point for me to watch the chart no more. I need to go to bed, right? I was too tired regardless. So the market then runs down, and the fact that it runs down is because here there was no significant like in this whole run up from the start, there's no significant sell side has been taken. So this was kind of expected either now or near the final hour macro to go down, right? And the target for this would be, honestly, essentially because it's starting like a market maker sell model, it'd be the 0.275 other range. That's what I would target. I didn't even check this, so let me just write the 0.275. Yeah, just around there basically. That's why it went to that low. And then again, it had a parabolic run up at 27, which looks like news to me, right? I don't know if there was news or anything, but this candle from these is just not looking normal, right? Again, this high right here, where was it? Oh, I can't lie, I'm too tired to even show all the thoughts on why, but just know it was a PD array. Which was it? On the daily, and it also lines up with the new weekly opening gap, and also it lines up with the 4.5 standard deviation of the manipulation run. Let's just show that real quick, maybe, because that's the last thing that I want to talk about. Because I was saying, if I'm awake, I'll just take a final hour macro, right? And that's why I don't care about missing this trade, right? So if we, that's not the final run, right? If we just line up 0.45 and 4, right, for good movers, right? As you can see, it's that high, right? It's just simple standard deviation, right? Where you projecting price where it should end the run, right? So that high would be the max extension for the day, right? So you can see we enter at 3 exactly. I'm looking at to enter at 315. Last thing that's holding the price would be this fair value gap, right? On the 1 minute, right? The second that we enter here and close below midpoint, showing this fair value gap, I'm telling you 200%, 315 right there. That's a 317 candle. The macro starts, I would take that entry, just seeking anything lower, right? And just waiting around the close. So see that we don't want to take this low. I'm good enough. It's just, it'll be a final hour macro trade. It'll be near the amount same profits that I would take it for the long, but I would go heavy on contracts here because I'm more confident on this, not seeking any higher prices, because the target for high prices is done, right? So if I'm awake, that was gonna be my trade in case I missed this trade, which I did miss this trade for today, right? So I missed this trade and I was sleeping for this trade. Doesn't matter, we got tomorrow. So actually that's the market recap. What do I expect for tomorrow and the following days, really? If we go back on the daily, right, first of all, we want to see, yes, we closed below, right, on the new weekly opening gap, but I want to see a closure above the new weekly opening gap tomorrow to show that we are really bullish, right? If we don't, again, even though this run was parabolic, it's still unknown, right? We just need a closure above the new weekly opening gap for me to say, all right, time to go for the highs, right? Until we don't close above this new weekly opening gap, I'm not gonna say that we're gonna go to the highs, even though it looks likely. We still need to work on the probabilities. Anyway, that's the market recap. I can't lie, if it was just normal market conditions, this was pretty easy trade, right? It's pretty obvious. Relative equal highs, right? New weekly opening gap that's unfilled. Standard deviation, even this lines up should with the 2 and the 2.5 as well, right? 2.5 right there next to it, and then you'll have the 3.5, whatever, it's right there. It was an easy day, kinda, but it was an easy day after days of weird market conditions and weird movements. That's why I don't have the confidence to market order, and I'll still be sticking to my limit orders for accurate entries, right? The time that the market is really easy and it's moving, I don't care about. I enter market orders and have a wider stop loss. But these market conditions, I'd rather have a tight stop loss and then enter a market order. If it doesn't fill me in, I know there's a trade later, right? Because there's this short, right? And then there's the final hour macro. I wouldn't care about this short because it's outside my trading time, right? I normally would like to enter at 11:10 max, right? And this was the final hour macro in case I missed anything in the morning session. This is the last bullet. But yeah, I had to sleep. I was awake basically for the whole day, right? Almost 2 days. Anyway, that's the market recap. Peace out.